Hello, everyone, and welcome to another quarterly update and Q&A brought to you by the team at Apollo Crypto. I'm Marc Woodward, investment partner, and as always, it's a pleasure to be joined by Henrik Andersson, Chief Investment Officer and co-founder of Apollo, and who also leads our investment team. Hello, Henrik.
Hi, Marc. Good to be here.
And thanks very much to the audience for attending. We hold these webinars on a quarterly basis. The crypto markets are, as always, continue to be fast-moving and exciting, so we'll certainly have a lot to discuss today. The previous quarter had quite some exciting and interesting news for us to recap for you. And as always, we are happy to take questions from the audience, so please submit any questions as early as you like through the Q&A feature, and we will answer these towards the end of the webinar. So for anybody new, Apollo Crypto is a multi-strategy award-winning investment fund manager that is based in Melbourne, Australia, but invests globally across the spectrum of crypto assets. We have a more than 5-year successful track record with 3 active funds, and we're focused solely on the crypto asset market. The purpose of this webinar is to inform our investors and followers and to provide a general update on the markets. And as a reminder, this is a general discussion, is not to be taken as financial advice. Please do your own research on the crypto markets. And so with that, I will hand it over to Henrik for his recap of the previous quarter and for his outlook for the coming quarter. Take it away, Henrik.
Thanks for that, Marc. So yeah, a lot of things going on in the crypto markets as regular, not just in the crypto markets, but more widely in the macro environment. So a lot of things to go over. Maybe starting with the macro picture. So I think going into this year, people were calling for a recession in the economy. I think in a couple of times actually last year, we saw the yield curve inverting, meaning that short-term interest rates were higher than longer-term interest rate. This is quite unusual, and historically it has predicated a recession in the economy. So we saw that happening. It's still inverted. It happened in late 2022. But I think we have seen a very resilient economy. We haven't seen a recession in the major economies so far this year. So I think that's a little bit of a surprise. We've seen equity markets performed fairly well this year. So I think from a macro perspective, there is definitely some surprises. We have seen interest rates stay very high. We've seen a few more hikes from central banks. We'll get more into that when we talk about the outlook later on. But overall, I think there's been quite a few surprises when it comes to the macro environment, sort of being stronger than expected and higher interest rate kind of remaining than maybe we would have expected looking back 12 months. I don't know. Would you agree with that kind of summary, Marc?
Yeah, no, I think that's spot on. I think the events of the past few weeks have, potentially made it harder for the Fed to continue raising interest rates with sort of surging oil prices and sort of persistent inflation across the globe. So potentially, I think we've seen sort of a flattening out of the expectations for additional increases through the rest of this year.
Yeah, and the reason, I guess, why we talk about the macro picture is because this, affects crypto markets as well. Crypto is becoming this global asset, right? So it's not like unaffected what's happening in the wider macro environment. There's definitely a correlation there. Maybe the final point on the macro side is kind of the real estate kind of issues we have seen coming out of China in the last few months that still seem to be lingering. So, I think the growth expectations, the GDP expectations for the Chinese economy has been written down in kind of the recent months and weeks. So that from time to time, sort of when those issues pop up, that tends to put some pressure on the markets. So I think, yeah, that's kind of the macro environment looking back year to date. And then obviously that affects the crypto market. And what we have seen in the crypto market is we have seen a rebound in some assets year to date. I talked about equity markets being fairly strong year to date. Obviously last year was a terrible year for the crypto markets. So we have seen that kind of rebound. I still think like we are in a bear market, right? We're still in the bear market when it comes to crypto, despite some prices kind of rebounded from the lows last year, right? But it's still a fairly weak market. So even though like some assets are up, posted some gains, I would say we're still in a bear market when it comes to crypto markets. The one maybe surprise this year has been Bitcoin, the largest asset, which has shown quite a bit of strength this year and outperformed most assets, I would say, and that is a little bit surprising. At least I find it a bit surprising that like the biggest asset, Bitcoin, which typically has a lower beta, lower volatility assets than some smaller crypto assets, has managed to outperform when the market rebounds. Usually when we see bigger moves, Bitcoin seems to be lagging, doesn't go down as much, doesn't go up as much as some of the smaller, higher beta assets. That's sort of the definition of beta, right? But I think Bitcoin has been a bit of a surprise. It was a surprise in 2022 as well. Like Bitcoin didn't really outperform on the downside last year. It was posted very similar return to Ethereum last year. And this year it has outperformed. So Bitcoin, I think, has been surprising investors for a couple of years now. So yeah, what do you think is like the backdrop, the kind of the underlying reasons for that, Mark?
Well, I think altcoins, everything except for Ethereum and Bitcoin have done even worse, right? So a lot of them are down 90-95% or even more. Some of the projects have been abandoned. So perhaps some of that capital and investor interest has flowed back into Bitcoin as sort of the number one crypto or the number one crypto asset. I think the other interesting thing to look at is and sort of a barometer for the health of the Bitcoin market is the hash rate. So for those on the call, this is the measure of the computing power that supports the network. And it's often, again, used as a barometer to see how healthy it is, how much interest there is in securing and supporting this network, and how much capital is being devoted in the background to supporting that network. It's at all-time highs. If anybody recalls, it was banned in China a few years ago. It's now reassembled itself in more secure places or in more global places. And I think it's also interesting, we're starting to see more and more oil and gas and utility companies starting to plug in a Bitcoin miner to try to use some of the excess energy that would otherwise been wasted, or to be able to stabilize their grids. So I find that's going to be a very interesting trend going forward as more and more utilities and energy companies start to understand the importance of the Bitcoin mining network.
That's a good point, Mark. I think the Bitcoin network has been super resilient despite like what you mentioned, like the ban in China a couple of years ago and everything going on. So that's super interesting. I think there's also like some regulatory piece there when it comes to Bitcoin. And we'll talk more about that, but I just want to mention Ethereum first because it's the second largest asset, and in our Australian fund, it's the largest holding in the portfolio at the moment. So Ethereum, it's been over a year now since they moved to proof of stake, so maybe worth kind of recapping that, what we have seen in Ethereum since the move to proof of stake, which was arguably the largest upgrade to Ethereum since inception. And I think that has been a surprise as well. We have seen ETH being deflationary since they moved to proof of stake, which you would expect in a bull market, right? Because the number of transactions sort of affect the burn rate for Ethereum now. But even in this bear market, this brutal bear market last year, and kind of during kind of this flattish bear market this year, we've seen Ethereum since the move to proof of stake being overall deflationary, which is a big change for Ethereum. And another surprise. I think the two largest assets has been kind of surprising in the last year or so. And overall, I think the Ethereum ecosystem have gone from strength to strength. A lot of the newer projects that we talk to and invest in, they're deploying on the Ethereum ecosystem, either on mainnet or on increasingly directly on the L2s. So like the Arbitrums, the Optimism, the base ecosystem. But so far, I think Ethereum year to date has underperformed Bitcoin. Again, surprise. That might change going forward. I certainly believe that myself. If the market improves and we move out of the bear market, I think Ethereum will perform better than it has done this year. And I guess we can't recap this year without talking about regulation and SEC, because that has been, I wouldn't say a surprise, because what happened with FTX was obviously a major event when it comes to crypto. That happened in November of last year. And we saw an SEC be coming out kind of in Q1, Q2 this year, very aggressively, I would say. So we saw the lawsuits against Coinbase, against Binance. But I think more recently, sort of the tune has changed a bit. So they made a number of announcements. But then more recently, I think it's become more clear that it's, you know, a lot of these processes will go through kind of the US law system, and there are, at the end of the day, there will be judges and courts that will decide the outcomes of many of these processes. And we have seen some setbacks that SEC has faced more recently. One that comes to mind is the lawsuit against Ripple that, you know, was initiated 2.5 years ago, where the judge, I think, partly gave a victory to Ripple in terms of determining that XRP is not a security, it's a token, and that's it. SEC tried to appeal that ruling, and they failed kind of getting going with that appeal as well. And we've seen a number of other kind of cases where SEC not necessarily has prevailed. So I think that's a little bit interesting. What's your take on that, Mark?
No, I think you're absolutely correct. I mean, there was a flurry of lawsuits and announcements in the first half of this year from the SEC, which certainly created a lot of volatility in the market and spooked a lot of people. You know, I think since then it's been somewhat quiet. The SEC hasn't really filed any new charges or any new lawsuits since probably the first quarter of this year. And in fact, they've had a string of sort of losses. So you cited Ripple. They've sort of lost in the Grayscale GBTC lawsuit, where Grayscale is suing the SEC for having them stop the conversion of the largest, you know, the largest Bitcoin investment trust, you know, conversion into an ETF. And so I think perhaps they've been a little bit defanged, if you will, or, you know, maybe they've taken on, you know, just as much as they can take on at this point. Plus, there's been a bit of pushback from the U.S. Congress. You know, Gary Gensler has been called in front of Congress a few times and been grilled, you know, by various Congress people about his attitude towards ETFs and, you know, into crypto in general. So hopefully some of the worst of that regulatory fervor is past, and we can look forward to a few more positive announcements in the coming year. And
you mentioned GBTC. I know you've been following GBTC quite closely, Mark, and you've been following the discount and what's going on there. So what is going on there?
Yeah, so the Grayscale Investment Trust, or GBTC, was probably one of the first vehicles that enabled regular retail investors easy access and exposure to the crypto markets. So they're basically buying a tradable investment trust through a brokerage account. So it trades just as a normal stock would do, and it was a way for people to get exposure, you know, who didn't want to do self-custody or didn't want to create an account through an exchange. So for a long time, there was a discount. It traded at a discount to NAV because there was an arbitrage opportunity in between the way the trust was structured and the actual price of Bitcoin. I won't get into those details here, but I think the discount went as high as 46%. So you're basically buying the Bitcoin investment trust at a 40% or 46% discount to the underlying value of the assets in that trust. So that become a new trade. Anyway, now that discount is starting to narrow as I think investors expect the conversion of that trust into an ETF. So I think that's another positive sign. There might be some pressure on the spot price of Bitcoin because some funds might be doing sort of a trade where they're shorting the spot and they're going long GBTC as that discount will narrow. So there is some speculation that GBTC will be the first ETF approved, given that it's already an existing vehicle with significant amounts of capital in there and a number of investors who would benefit from its approval and the shrinking of that discount.
Yeah, that's really interesting. And like with the discount, you have like a market price on the probability of a conversion, perhaps. So that makes it really interesting. And maybe we should just move on to like the ETF applications we have seen as well year to date, since you mentioned the conversion to an ETF. I think what everyone is talking about and what is pretty exciting is that the biggest asset manager in the world, BlackRock, filed to list the Bitcoin spot ETF, something that hasn't existed in the US so far. We have ETFs listed based on futures on both Bitcoin and now Ethereum very recently as well. But we haven't seen a spot ETF on Bitcoin, which is something very significant, an ETF holding the actual underlying asset. And now we saw the biggest asset manager in the world, BlackRock, with $9 trillion in AUM, kind of go out with an application for exactly that. And we're seeing the CEO of BlackRock talking about Bitcoin like this global asset and a digital gold. So I think that's very significant. What do you think, Mark?
Yeah, absolutely. Super encouraging. It's hard to imagine their ETF not being approved at some point in the near term. Now, having said that, there's been applications for, I think, 11 years or something. Yeah. I think Gemini was sort of the first one to apply, and they're still waiting for feedback. But it's not just BlackRock, it's Fidelity, which has $4.3 trillion, VanEck, which is one of the largest mutual fund companies and asset managers in the world, Galaxy Digital, so on and so forth. There's a number of these, probably close to 20 active applications. But what's encouraging is that these applications are now being updated. What would probably be direct feedback from the SEC, right? So there's been minor changes to some of the applications. They're all sort of being homogenized. So you're seeing the same changes happening to all the applications. That would lead one to believe, even though the SEC hasn't said it, is that they're actively engaging with these asset managers to, get these applications approved.
Yeah, and it comes back to what we talked about before as well when it comes to like the regulation and Bitcoin outperforming year to date. One piece of that puzzle is probably that SEC has been very clear that Bitcoin is not a security. And that is something that Gary Gensler has been saying. He hasn't really been very clear at all when it comes to anything else but Bitcoin. So that sort of strengthened the case for listing a Bitcoin ETF as well, I would think. And also kind of, this is probably part of the explanation of Bitcoin's outperformance year to date.
Right. I think some of the, I think the BlackRock CEO said that a Bitcoin ETF or a number of ETFs could bring in tens or even hundreds of billions of dollars into the crypto market. So that's pretty significant for him to say when I think the market cap of Bitcoin is 500 or 600 billion. Yeah. And some of the forecasts that if the arbitrage between GBTC and the underlying spot were to close or to get approval, some people have forecasted a significant jump in the price of spot Bitcoin, something like 50%. So I think everyone's expecting a significant price move once these applications start getting approved.
Yeah. And you mentioned Fidelity as well. That's another very large traditional financial asset manager. that has been doing things in the digital asset space for a long time now, and they're putting out research reports on it, assets like Bitcoin and Ethereum. I think we have shared some of those on our newsletters in the last few months. And that's very significant as well.
And sorry to interrupt, it's not just the expected capital inflows, right? It would be a seminal shift from the SEC to actually start doing constructive regulation in the crypto space, as opposed to trying to sue people into compliance. They're actually starting to regulate and approve vehicles for investors to be able to, invest in.
Yeah, good point. So maybe just to finish off the recap, because I think everyone is waiting for your outlook and and what we see ahead. So maybe just a couple of more points on kind of the recap year to date. Another kind of big narrative this year has been real world assets. So I think that's interesting to see. Still early days. I think a lot of the activity has been in like tokenizing T-bills, because TradFi yields have gone up. And those yields are around 5%. So we see protocols like Maple, originally from Australia, doing things in that space. But we also see some traditional players doing things in the real world asset space. Like I think just in the last week, we saw the UBS kind of working on tokenizing a fund on Ethereum. So things like that is exciting. Something we're looking at very closely. And that can kind of widen the market for crypto assets potentially. Another thing is I would say is Coinbase kind of helping launch the Base network, which is an Ethereum layer 2, helps with scaling. And they have seen quite a bit of activity on Base already. It's overtaken networks like Solana in terms of TVL already, just after a couple of months. And we have seen a lot of activity and some experimental new networks being launched on networks like Base. There's one SocialFi app that has had a lot of traction so far, but I'm sure we'll see many other kind of similar things happening. But I think that's quite significant, like the Coinbase embrace of the Ethereum ecosystem and launching Base, kind of helping scaling Ethereum. So we are pretty excited about that, and I think, as most people know, we are investing heavily in the Ethereum ecosystem, which has gone from strength to strength this year. So I think that's pretty much summarized year to date, kind of the major items. So I think the next thing we want to do is look forward, but just want to remind everyone that they can ask questions as well. So like after our little outlook, we will happy to take any questions. So please put in. I think there's like a Q&A tab that you can use to ask questions to us. So please do that. But looking ahead, Mark, what do you see as the major trends?
Sure. So it's always tough to have a crystal ball, in the crypto markets. We're probably, hopefully, towards the end of what's been arguably the longest and most severe sort of bear market in crypto. We had a number of black swan events last year, which wiped out a lot of capital and a lot of leverage and some, let's say, imperfect business models, as well as some exchanges that were doing illegal things. So now that the industry has been cleaned up, it looks like it will finally become more institutionalized. So with the entrance of players like Fidelity and BlackRock and VanEck and others, which are highly regulated, very large financial fund managers, that the space will become a bit more serious. More capital will come into the market. More innovative products, I think, will start to come out once the ETFs are approved, and certainly more liquidity in the market. So what could be some of the catalysts that would drive us into a more positive market or even a bull market run? Certainly the approval of the ETFs, as we've discussed at length on this webinar, would bring additional capital and additional investor confidence that the regulatory environment is going to be sort of a more constructive one going forward. The big event next year, at least in the Bitcoin network, is going to be the halving. So for those that don't know what that is, the supply schedule for the creation of new Bitcoin mandates that every 4 years, the new supply halves. So every 10 minutes, there's new coins being generated through the work of the Bitcoin mining network. And that supply is fixed. It never changes except every 4 years. So the supply will halve. And if you look at previous cycles, that is typically corresponded to a bull market run. So if the demand stays the same, but the new supply of Bitcoin halves, traditionally the price will go up. So I think people are looking forward to that. That might also coincide with a more favorable interest rate environment. So hopefully we've reached the end of that, and more liquidity will start to come into risk assets like the crypto market. What I think is also encouraging, from our standpoint as an investor in early stage projects, we have a constant contact with founders and entrepreneurs in this space. They continue to build and to innovate. They're not discouraged. They are launching new versions of their product, and we're seeing emerging leaders come out during this very difficult time. Hopefully we've invested in a few of those emerging leaders. And yeah, so that's sort of the crystal ball. We're all sort of waiting for ETF applications to be approved and the Bitcoin halving, which I haven't, which will be in sort of the late Q1, early Q2 of next year. So I think that's something for investors to look forward to. And if you start to see assets like Ethereum and Bitcoin return to their all-time highs, which they typically have in each cycle, I think you could see alternative coins as well do very well. So even though they're down very much, we think there's a significant opportunity going forward if you select the right tokens.
Yeah, good summary, Mark. Just to summarize, like the Bitcoin ETF approval could potentially happen maybe in Q1 next year. And then you have the halving happening in Q2. So that can be a pretty powerful combination potentially. And then you can kind of overlay that with a change in the macro environment, with the interest rates being close to peak, at least according to most observers. So that's a pretty interesting macro perspective going into next year. And you combine that kind of with a very low sentiment currently in crypto. I think that makes it quite interesting. When it comes to, you mentioned like portfolio projects, maybe highlighting a few names from the portfolio, I think could be interesting for our listeners and viewers. So just two projects that I like to highlight would be like Swell. So Swell Network is a liquid staking token network. That has been another major narrative, I would say, in the last 12 months. If any of you guys read our newsletter this week, we shared the CoinGecko report on liquid staking networks, and we have seen a huge growth in that year to date. And Swell is one of the newer networks. They have amassed close to 50,000 ETH staked now, so they have seen a lot of growth. And that governance token is not live yet, but I think that's likely to happen in the next 6 months. But overall, we have seen good traction there, I think. So very excited about that investment. Another one is Chainflip, where we were an early seed investor as well. Chainflip, for those familiar with Thorchain, Chainflip is doing something very similar, where you can swap native ETH to native Bitcoin, for example. Thorchain has had quite a bit of traction doing that. The fully diluted valuation of Thorchain, I believe, is over $1 billion. In the last few weeks, we have seen Thorchain being in the top 3 overall in terms of DEXs. So that's a new player coming to the market, and they have announced that they are releasing their mainnet before the end of this month. So I believe their date is October 24th. So that's another portfolio project that is, soon will be live. So pretty excited to see that finally going live as well. So that's kind of a couple of highlights from our portfolio.
So Henrik, I think we should probably try to take a couple of questions from audience here. So we've got a question just on the your statement earlier about being a bit surprised about Ethereum and Bitcoin outperforming most of the other market this year. Are there any adjustments that we've made internally to quote avoid some of these future surprises? And what's sort of the overall investment thesis specific to the Apollo crypto funds? Who are how is it designed? How is it structured? How do we give exposure to the crypto market to our investors?
Yeah, good point. I think like we have been better positioned than a lot of other crypto funds out there, because I speak to a lot of funds out there, and then beginning this year they didn't have any Bitcoin exposure at all, and it has been one of the best performing assets as we talked about, and it sort of have been we have had a good exposure in our Apollo crypto fund to Bitcoin. More recently, in the last couple of weeks, we've taken some profit in Bitcoin and sort of readjusted our exposure a little bit, but I expect Bitcoin to continue to perform well, especially given what you said, Mark, about the potential ETF and the halving happening. So I think we have been well positioned overall, and certainly better than a lot of other crypto funds that have really struggled, because a lot of the alternative assets have been traded down quite a bit this year. So from that perspective, I think we have been well positioned, but we are always kind of following the narratives in the markets and what's going on both on the macro and more like on a fundamental bottom-up level. So yeah, we are constantly adjusting our positions and reevaluating our portfolio. And crypto markets will always surprise you. There is no way around it, and that's why we think that you need to be an active investor. Like, you cannot passively predict the crypto markets over the next 5-10 years. So like, we don't believe in the index approach to investing in the crypto markets for this specific reason, because they will continue to surprise you. That's the one thing that we know.
Yeah, I would also just add in the Apollo crypto funds, our Australia domiciled fund. We give investors exposure to what we think are very exciting early stage projects. Henrik has highlighted a few of them. And I think this bear market has sort of enabled us to reevaluate new investments as well, and be able to select some future winners. So while all assets aren't going up at the same time, we think this broad-based exposure to crypto, as we've constructed in the Apollo crypto fund, will do quite well when the market turns to more of a bull market.
Yeah, makes sense.
Question
is around a specific talk, I think, on regulatory capture from Bill Gurley. I'm not familiar with this talk myself, so I can't comment on this this talk. I don't know, Mark, are you familiar? I
haven't seen that talk as well.
Yeah, so if there's any more specific question, we can try to answer, but yeah, unfortunately I haven't seen this talk. And so I would say maybe worth, you kind of mentioned, we talked a lot about SEC, but we have seen like regulatory developments in Europe with the MiCA regulation over there, and we have seen movements in places like Hong Kong. So maybe worth commenting on that. Mark, like, obviously the world is bigger than just the US, even if a lot of jurisdictions are looking to the US for kind of guidance. But I think Europe has adopted a crypto regulation that will come to effect in the next 1 to 2 years. Hong Kong, where we've seen some positive development there as well.
Yeah, I mean, clearly, crypto is a global market. We've seen other jurisdictions be a bit more, sort of favorable, I think, to crypto. We have seen ETFs and ETPs and other regulated investment vehicles for crypto in other jurisdictions. But the US is sort of the big market. And I think that, as the major superpower in the world, getting approval from the US, I think would be very significant and would also signal global investors that it's okay to invest in crypto and it should be a part of the portfolio, which I think is probably what a lot of investors and financial managers are waiting for. So there's a question just on the macro. It's about the general world economy slowly being, perhaps being a bit more negative. Could the outlook be a bit more neutral for crypto markets? Look, it's really hard to judge. I mean, I think depending on the recession and the response by the central banks, like we could see additional liquidity coming into the market. So if we do have a recession, I think potentially if interest rates do start to go down, I think that could be a positive for the crypto markets. But it's really hard to say. It's a very uncertain time, as everybody knows, if you're watching the news, with inflation and several wars sort of breaking out, and a potential for a recession, at least in the US next year. We also have an election in 2024. So that's something we sort of haven't really touched on. But there's a number of candidates who've, come out and said that they are pro Bitcoin or pro crypto. And, I think there is potential that there's increasing support for the industry among the elected leaders in the US.
Yeah.
So quick question on how much of the fund is in Bitcoin. So at the moment, I mean, I think our guide is between 15 to 20% in the Apollo Crypto Fund can be allocated, to Bitcoin. I think it's roughly 18% or so at the moment. And on cash, so in our market neutral activities in that fund, that's probably around 10 or 12% at the moment in the fund.
Yeah. We have a question about Tim Johnstone, who is currently an advisor to Apollo Crypto. So he moved on from kind of the full-time role at Apollo to becoming an advisor to Apollo. He's currently pursuing his own startup outside the crypto space. So he's still close kind of to Tim, but it's not at Apollo day to day.
So if there's any other questions, please fire them through now. We have a few more minutes left to answer any questions if any of the attendees have them.
There was one last question there as well, and also I'm not sure if you saw that, Mark, about reserves to make favorable entries in Alta. I'm not sure what banks mean by that, or maybe it means alternative assets, or.
Yeah, I think so. So yeah, I mean, I think the market neutral position in the Apollo Crypto Fund is there to give the fund flexibility to make new sort of primary investments or to make situation-based investments, as our investment team sort of dictates. And then there's a final question, just how much of the fund is in Ethereum? Henrik, do you know that off the top of your head in the Apollo Crypto Fund?
Yeah, so in the Apollo Crypto Fund is where we have our exposure to Ethereum. It's currently just about 25%. And we're active kind of staking Ethereum and using liquid staking tokens as well. And yeah, we are quite bullish on Ethereum. And yeah, just to add to Mark's answer when it comes to kind of our research to make investments, we are currently still active making primary investments. I would say that in this bear market, we are kind of being very selective. We are always selective, but we are being kind of extra selective, focusing on high quality projects. So we are still actively looking for projects, but we are fair to say we are making fewer new investments in kind of early stage projects than we have done in the past, but still actively investing in new projects as well as in liquid crypto assets. One new question as well. It's good with a lot of questions, so I appreciate that. What are the management costs of the fund? So our fee structure is 2 and 20, meaning that it is a 2% management fee across all three strategies. Any other questions, or it might be it?
One more, what models do you use when evaluating a company?
Yeah, good question. So we don't invest in traditional companies. We invest in crypto assets or projects developing a crypto network with a native asset. But the process, I think, is similar to maybe evaluating a company in some respects, definitely. So we have our overall thesis about the space, and you can access our investment thesis through our website, apollocrypto.com. So we have a top-down kind of outlook or thesis about the space that we are following when we make investments. And then obviously the bottom-up fundamental assessment is super important, and a lot of it comes down to the team, especially when we invest early on, because a good team can always pivot, can always adjust to the current market, and we've seen that in a number of good portfolio projects that they have managed to do that. So it comes down to kind of what you would expect from an investor, say investing in the stock market or in equities. It comes down to things like the management team, but it has to match with the product and our overall macro view of the space as well. So it's a combination of the top down and the bottom up approach that we prefer at Apollo.
So it's just I think you see that question, Henrik, just sort of comparing the returns profile for the Apollo Crypto Fund versus the the market neutral fund.
Yeah, so we are the manager for the Apollo Crypto Fund, which is an Australian fund, and we are the advisor for 2 offshore funds, and one of them is the market neutral fund, and that one is really not directional. So that one performs independently of the performance of crypto markets. So we mainly see kind of right now positive returns, but not as high kind of yields we can get in yield farming as we could in the past, perhaps. But the aim of that fund is to perform consistently and kind of capture the inefficiencies in the crypto markets. So I would say if you're looking for kind of the growth and capture the bull run around a potential ETF and around the Bitcoin halving, that's not the fund for you. So we would we recommend or have you look at one of our directional funds when it comes to kind of capturing the upside. So 2 of the strategies are long strategies that really are capturing the movements in crypto markets, and the goal with those funds is to outperform the crypto markets over time and capture the upside when it comes to potentially going into bull market.
Yeah, I think the yields in crypto are driven by trading activity and the demand for borrowing crypto assets, both of which are higher in a bull market than a bear market. So that while the yields will certainly go up in a bull market for a market neutral fund like ours, the returns won't sort of compare to a directional fund like the Apollo Crypto Fund or our other directional fund, the Frontier Fund.
Yeah, and there's another question as well. It's great to see so many questions coming in. It's fantastic. So do you see potential gains being greater in any particular area, layer 1 compared to layer 2, DeFi, metaverse, or gaming, etc.? What's your take on that, Mark?
Yeah, certainly. And I think if you look at our investment thesis, we're invested mostly kind of in the infrastructure layer of those areas is probably the best way to sort of describe it. So we wouldn't invest in a particular game or a group of NFTs, for example, but we might invest in a NFT exchange or in a layer 2 blockchain that's specific for trading of NFTs. Yeah, I think as heavy DeFi investors, we continue to invest in that space and think that will be or will continue to be a primary use case for crypto. So for those of you that don't know what DeFi is, decentralized finance, this is ways of replicating and improve upon existing traditional financial activities, but doing it in a trustless, decentralized way without a trusted intermediary. So things like exchange, so trading of tokens, lending and borrowing, derivatives, fixed income, etc. So doing all those things on a blockchain. And what's great about DeFi is that, it's all composable. So you can build your strategies using a number of different protocols, where that might be more challenging in sort of a traditional financial infrastructure. Certainly very positive on layer 1s and layer 2s. We think Ethereum, it's the largest position in our flagship fund, and the Ethereum ecosystem is probably, the largest sort of component within that fund as well. So certainly I think those infrastructure layers will do well, in the next cycle.
Yeah, so our thinking is, as you said, Mark, like focusing on the core infrastructure, we can kind of leverage activity even, if it takes off in gaming or metaverse, wherever it happens, those core infrastructure will gain, because like a game might be deployed on an L2 and then our investments in that particular L2 will do great, or like trading of NFT assets, are likely to happen on some of the marketplaces that we invest in. So like investing in the core infrastructure, we can leverage kind of activity, but we don't have to, necessarily bet on exactly where that will happen.
So I think we're over time a little bit, Henrik. So unless there's any last questions or any last thoughts, maybe that's where we should leave it. Certainly want to thank everybody for their attendance, and thank you, Henrik, for your insights and hard work. We welcome everybody on this call to reach out to us if you have any additional questions, or if you want to learn more about our funds. Otherwise, thanks very much for attending, and we will see you next time.
Thank you.